Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is sinking, stock indices are rewriting records, gold is back in a consolidation cage, and Bitcoin is selling facts. The White House's trade deals have sent the US dollar plummeting. The US has signed agreements with Japan, Indonesia, and the Philippines. Tariffs range from 15% to 19%. Tokyo has secured a reduction in import duties on cars from Washington from 25% to 15%. Looking at this deal, the European Union also wants to get 15% tariffs. Brussels does not intend to activate the anti-coercion mechanism and respond with reciprocal duties of 100 billion euros. The reduced risk of a large-scale trade war between the US and the EU is increasing global risk appetite and putting pressure on the US dollar as a safe haven asset. At the same time, the reduction in trade uncertainty is giving the Fed a free hand to ease monetary policy. A sharp cut in the federal funds rate may happen sooner than expected, contributing to the fall of the dollar. The futures market expects an acceleration of easing in 2026 due to Jerome Powell's departure from the Fed chair. Donald Trump should choose the nominee, and obviously it will be a very dovish person who aligns with the president's opinion. Recently, he demanded that the Fed cut rates by 300 basis points. The U.S. economy is not falling off a cliff, since trade deals are reducing uncertainty. The Fed is moving towards easing monetary policy, and corporate earnings are positive. What else do stock indices need for a rally? The S&P 500 continues to break historical highs and eagerly awaits data from the so-called Magnificent Seven. Analysts expect those companies to report 14% profit growth compared to just 3% growth for the other 493 companies in the broad stock index. So far, actual data for the second quarter has been better for 83% of reporting issuers. The average for the last 5 and 10 years is 78% and 75% respectively. A weak dollar supports the S&P 500. Due to the enormous size of the U.S. domestic market, only 13% of corporate profits come from abroad. Companies included in the broad stock index are more international. For Goldman Sachs, for example, the figure is 28%. How long will the euphoria last? If tariffs push the U.S. economy towards stagflation, corporate earnings will fall, and the S&P 500 will slide. Concerns about the trade war between the U.S. and the European Union and the retreat of platinum group metals allowed gold to break above the upper limit of the medium-term consolidation range of $3,250 to $3,400 per ounce. However, the White House's trade agreement with Japan and the reduction of import duties on Japanese goods brought gold back to the center of the latest consolidation range. Platinum and palladium, which showed impressive results in 2025, were the main beneficiaries of rumors that gold was overbought. Investors diversified their portfolios in favor of less expensive metals. However, due to the high share of demand from the automotive industry, platinum group metals are highly sensitive to tariffs. A reduction in import duties could restore the upward trends and put pressure on gold against the background of renewed capital outflows. The leader of the precious metals sector is also vulnerable due to expectations of a reduction in the federal funds rate. The futures market forecasts 1 to 2 acts of monetary expansion in 2025 and is confident of 3 in 2026. The sooner the Fed begins to ease monetary policy, the better for gold. The U.S. Congress's adoption of a landmark law for the crypto industry on the circulation of stablecoins triggered a process of selling digital assets based on facts. Prior to this, there were many rumors about an increase in the market capitalization of stablecoins. Treasury Secretary Scott Bessent claimed that it could exceed $2 trillion by 2028. Citi cited a figure of $3.7 trillion. According to JP Morgan, even the $2 trillion figure is overly optimistic. The market infrastructure is not ready for it, and investors won't immediately abandon traditional payments. As a result of the gradual decline in optimism, Bitcoin was unable to rewrite historical highs, even against the background of growing global risk appetite and new S&P 500 records. The shift in market structure with a decline in crypto whale dominance and a rise in institutional participation is making the leading digital asset behave more like a traditional one. Even 20% per year would be a good result. Since the beginning of 2025, Bitcoin quotes have added 26.5%. Clarification of the tariff situation allows markets to restore old ties and turn their attention to economic events. Yes, investors remain concerned about the potential US-EU trade agreement ahead of the August 1st deadline and ongoing negotiations between Washington and Beijing. However, the focus will shift to the packed economic calendar taking center stage. The releases of US GDP data for the second quarter and labor market data for July will be the highlights of the week, as will the FOMC meeting. Bloomberg experts do not expect a cut in the federal funds rate, but there may be 2 dissenters in the Fed. Christopher Waller and Michelle Bowman have made it clear that they are not opposed to an immediate rate cut. After GDP fell into negative territory in the first quarter, Trading Economics expects the indicator to grow by 2.5% in the second quarter, thanks to a recovery in net exports. It seems that the U.S. economy is not going to fall off a cliff. However, slowing employment and rising unemployment could be warning signs of a slowdown. As a result, stock indices and the dollar are at risk of going on a roller coaster ride. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.